Most people have probably all heard of Warren Buffett, the Oracle of Omaha, businessman, renowned value investor, and one who has achieved what many would dream of in terms of financial success. So, what four fundamental things made Warren Buffett as successful as he is, and what can help you build your own financial empire, improve your own character, and work towards achieving your own goals? I always knew I was going to be rich. I don't think I ever doubted it for a minute. Warren Buffett. Easy to say after you've already achieved a massive fortune to the sound of $130 billion. Yes, you heard that right, $130 billion. This is the equivalent to the GDP, or a monetary measure of the value of all final goods and services produced in a country, right around about a yearly basis, of Morocco, Ethiopia, Slovakia, Ecuador, and the Dominican Republic, and more than over 100 countries at the time of this video's publication. To put this in another perspective, he could buy outright 520,000 homes at the value of $250,000 each, or roughly 236,000 very nice sports cars valued at around $550,000 each. To which 99% of Warren Buffett's wealth was created after his 50th birthday. However, what values did this man possess, and what made him successful? The first principle is focus. This truth is evident with a simple example of whatever you tend to focus on, you find. Warren was a man of focus, and this was something Warren Buffett claimed led to his success. Have you ever had in your mind something that you wanted, say a nice new car, and all of a sudden you start seeing that exact vehicle on the road a lot more frequently than you recall? Did the car just magically appear more? It may seem like it at first. However, this phenomenon stems from our reticular activating system, or RAS for short. This system is responsible for why you can be in a crowd and tune out most of the noise, but then immediately notice when someone says your name. Focus is singularly responsible for where you are going. Another way to look at it is the destination, or building blocks to get to your destination. A question I'd ask yourself is, what is the first step I need to take to achieve financial freedom as Warren Buffett has? Buy an asset and then work more so you can make more to buy yet again another asset? Warren bought his first asset at the age of 11 when he bought his first ever paper stock back in the day, to which he bought 3 shares of Citi Service stock, to which it dove in price, and after it rose a little above where he bought it for, and he decided to sell it shortly after. However, we can learn that he was interested in making money at a young age and was learning how to do so very rapidly because that's what he was focused on. For simplicity, an asset is an item that has value and will increase in value as time goes on. Some examples of assets are stocks, bonds, real estate, businesses, commodities, and the new kid on the block, chain, crypto. From an early age, Warren was set for financial success. He would constantly be thinking about how he could earn or make more sales, as well as make more investments and acquire more additional businesses, as well as analyzing finances and the effect of compound interest. Susan Buffett, Warren's wife, said something along the lines of that this is Warren's mental scorecard for success in life. Each time he makes more money or finds a business that everyone has access to the same information as he did, and that business turns into a winner, he gets a huge sense of accomplishment. As we liken this principle to ourselves and first focus on what we want to accomplish, whether that be financial prowess, a comfortable living, or maybe something more family-oriented like being a good man or woman for your family, whatever it is that you truly want, you must focus on that and in time watch it start gravitating to you just like a magnet. The second principle is consistency. Warren was always an expert at numbers. He would memorize them and be able to, in quick succession, rattle off a plethora of numbers about the companies he would analyze. Warren would analyze businesses' financial performance because that's all stocks really are. They are ownership in a company. He would look at a company's profit margins, the amount by which revenue from sales exceeds cost in a business, to ensure that the company is healthy and, of course, able to grow. Return on equity, or ROE, stands for the net income generated per dollar invested into the company, i.e. they are utilizing their investments correctly. Moat, like a large castle with a large moat of water surrounding it, making it harder to take down. Businesses are competitive in nature, and there's the saying, all is fair in love and war, and, well, business. And a lot of businesses come and go over time. It's often a modern day war of businesses looking to beat each other out by either capturing market shares, buying out other businesses, and it can be a very ruthless or rigorous environment. Moats in businesses are the competitive advantage or edge that the business has against its competitors. An example would be like Costco as a low-cost producer, meaning they can produce more at lower cost than competitors, essentially safeguarding their business production. The value investor. He would oftentimes seek out stocks that were undervalued relative to the company's intrinsic worth. Buffett would use a discounted model to identify undervalued stocks. It's like going to the grocery store and buying those such items that you want, but getting them at a 33% discount. One of the big successes of Warren Buffett was made on the purchase of an undervalued stock. He purchased companies in varying markets that were household staples as well. Truly diamonds in the rough. Through following this process consistently and letting compound interest do all the heavy lifting, he made his fortune. The simple truth of consistency will change your life in one way or another. Think about it this way from Dave Ramsey, who had a simple yet profound formula. If you invest $500 a month for 12 months for 40 years while earning an average 12% per year return, you'll have a fantastic net worth of over $5 million. Truly amazing. Now, what if you can spare more than $500 a month? The future is exceedingly bright. Thirdly, we have confidence. Buffett was a confident man and able to make decisions based off of his own analysis while young to big, weightier decisions that shape the future of the company Berkshire Hathaway. Warren said it takes 20 years to build a reputation and only 5 minutes to ruin it. If you think about that, you'll do things differently. One of Buffett's quotes materialized in one of his biggest failures. You may have already heard about the Salomon Brothers scandal, but this event illustrates a great deal about this man's character. An acquisition of 12% of the company at the time worth over $700 million. Unfortunately though, things were not going well inside the company. In fact, in 1991, Salomon Brothers were under investigation for improper trading of treasury bonds. They submitted false bids to manipulate the market. This led to some tough conversations Mr. Buffett had to have, one of them being between himself and what should he do next? Leave the company and let it implode, or take responsibility for something he never had a hand in? He had 24 hours to make a decision, and he ultimately ended up choosing to take responsibility for the actions of the company and worked with the Treasury to save what was at risk of over 8,000 jobs and to reverse the damage done, and to ensure it would never happen again under his supervision. Despite this failure in the beginning of choosing this company to invest in, he was still able to turn it around and prevent a colossal implosion of an investment company. He was able to do this simply by believing and doing what he said. A different view of confidence is described as the feeling or belief that one can rely on someone or something or being reliable. By being a man of your word is simply building confidence, meaning what you say and following through on it. In our world we live in, where we foster most of our actions digitally and do not have face-to-face conversations nowadays, this has taken away a lot of the confidence of people. And I firmly believe if you are seeking out greatness, no matter if party tricks or fancy tactics will get you to where you want to go. They may help for a time, but ultimately you must have ethics, and being a person of confidence is one of those I find very remarkable about Warren Buffett. He gained this as he attributes to his father. Although their paths they chose were vastly different, his ethic of striving to do what's right and helping others not by taking advantage of helpless people was one of his biggest strengths that led to what Susan, his wife, humbly called him a good man. Last but not least, we have the big one: compound interest. Buffett understood one very powerful thing, and that was compound interest. I will liken this to planting a tree. You plant one tree in a large 1-acre field and you take care of it. Over time, the tree will drop seeds, which will create little saplings, which in turn, if you take care of them, will make more trees. And the cycle continues, adding upon more and more after your initial work on the first tree. This is a simple form of compounding and exponential growth, and time is one of the biggest factors in compound growth, and this rewards the patient. Let me take you back to the $500 a month over 40 years earning 12% interest equals roughly $5 million. But how much did you really put in? Only a mere $240,000. And with picking out the right assets that produce 12% per year with 40 years of time, turned into $5 million. Now, isn't that remarkable? One simple thing I love doing is running numbers myself, and there are many compound interest formulas online. You can simply Google compound interest calculator, and you'll be able to find some great sites to help you navigate your journey. I'll list one I like to use in the description down below, and hey, like and subscribe while you're at it if this video helped you so that it may help others. And have fun utilizing that formula. It is the simple pathway to wealth that I can share with you. Continuing, it was the renowned scientist Albert Einstein who said compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't, well, he pays it. And Warren often reflects on these words, and you can choose to save anywhere from 15 to 50% of your income and invest it into assets, and with time can reap the benefits of compounding interest. On the other hand, you can choose to buy a nice car, for example, that you can afford, but that is taking away 10 to 30% of your income, paying 7% interest with exceeding high payments on something that loses value, meaning it's a liability, and doing the opposite of what you want in your portfolio. Now imagine the difference this will make in your life. Mistakes happen. Sometimes you want to do the fun thing instead of the thing that'll benefit the later you because, well, hey, I'm living in the now. One great thing we can choose to do is compound our learning, especially with the vast amount of knowledge available in our digital age to make us better. Now, in closing, the 4 principles I have learned from Warren Buffett that I hope help you on whatever journey you currently are on are sharp focus, consistency in deeds, confidence in yourself and for the benefits of others, and last but the biggest one of all is compound interest that may ever increase your fortune if you apply it for your benefit. We live in a time of such exceeding abundance where we have access to many things and have choices to make for the good or for the downfall of our populace. May this give you a greater foundation into the life you want to live, and remember to finish strong.